Swirling questions over corporate governance, valuation, and its business model, causing WeWork to delay its upcoming IPO. What does that mean for competitors in the space? Well, joining us now is the co-founder and CEO of Knotel, Amol Sarva, after the company recently completed a $400 million round of funding of its own, taking Knotel's valuation up past $1 billion here at Post 9. Thanks for being here. Let's start right there. WeWork IPO aspirations on ice. Is that a good thing for Knotel as a competitor, or is it a bad thing in the sense that it could cast a shadow on sentiment for the industry more broadly?
It's kind of a circus, isn't it? I think it's a recipe for what not to do. Though before all this stuff, I think the biggest insight was office is a business about big enterprises, and it's about capital efficiency. And in that S1 and in the character of that business, you see even more recipes that we've really tried to build a business that's entirely different. It's just about enterprise, and it's 5 times more capital efficient than what those guys have been doing.
When you talk about 5 times more capital efficient, I guess break down how different the business model is and why you're convinced that Knotel's business model will work, even though there's skeptics out there about flexible office space in general.
Those guys got a lot of leash from Saudi Arabia and SoftBank. I think they've raised $13 billion so far to get to something like $3 billion in revenue, $4 invested for every $1 of revenue. Our model's the reverse. We're 5 times more efficient they are, and I think the reason is because we serve enterprise. It's all we do. It's all we ever did. It's 100% of what we do. When you get under the covers on that, it's a question you ask the CEO. The CEO's got to walk over to the head of technology and say, hey, what happened to all those data centers we used to run? How did CapEx turn into OpEx? What is this cloud thing? You grab that person by the neck and walk over to the CFO and ask, why are we still doing it the old way on real estate? Why do I have billions in liability on my balance sheet?
What happens, though, this is the part that concerns me, when a downturn hits, and then a customer can go back and forth between you guys and WeWork, on short-term leases and try to lowball you down further and further. Does the model still work then with all this supply between you guys, WeWork, Industrious on the market?
We serve large companies. They're not moving every day or every week. I started my first company in 2000, a mobile phone business, and that was a pretty deep recession. It ended up going public, Virgin Mobile. And in 2008, the biggest player in this space, Regis, they did better than General Electric, General Motors, Goldman Sachs, and Citibank. They made it through just fine. Even we are operating the last couple years in London, which is not a relaxing market. I mean, Brexit is about as much of a crisis as you're ever going to see. We're 10 times bigger than we were a year ago. I feel really confident that defense-minded CEOs, when they're on defense, they're going to come to flex and away from leases. That's really something no one loves.
So do you think this is more about the business model challenges, or is it the typical corporate governance, ownership structure asks that they're coming to market with?
I'm not sure the corporate governance stuff is typical at all. It's highly unusual, the stuff that's happening over there. We are just a plain vanilla company. I've built so many companies over 20 years. We're just doing it the old-fashioned way, which is making something new. It does involve a really bold vision of the future, and it's moving an industry that's 1,000 years old. Not that much has changed. It's not going to be easy. Their problems, I don't know. I mean, we built our thing totally differently, and I see it in the numbers when I go into the office every day. That is the essence of it. It is a financial metric.